Hi, this is James Shug with Westpac London's end of day report for Tuesday the 13th of November. Well, it started off with as a bit of a down day here in Europe, taking the lead from Asian markets, which had been selling off. Wasn't helped along by a sharply higher CPI for the UK, although the government decision a couple of years ago to allow substantially increased tertiary education fees, that kicking in October, was the main factor behind the CPI jump from 2.2 to 2.7%. German ZEW analyst expectations deteriorated for the first month in 3, and their current assessment had its sixth consecutive decline. In the US, small business optimism crept up a little bit in October, but the IBD TIPP read on consumer sentiment for November was down quite sharply from 54 to 48.6, reflecting a weaker assessment of the economic outlook, concern about one's personal finances. But interestingly, the federal policies component actually rose slightly. That survey was taken just a few days ago, so it would have been after the election result and the subsequent concern about the fiscal cliff. So that's most of that is not particularly good, but two things. Firstly, Greece is not going to default this week, according to Olli Rehn, the European Economy and Monetary Affairs Commissioner. He's basically said that the Greek banks will be able to roll over their holdings of Greek bills, and although it's not exactly specified where all the collateral is coming from for that. Also, the German finance minister has made it pretty clear that on the November 20 meeting of EU finance ministers, Greece will be given 2 years extra to reach the 2% of GDP budget deficit target. It will be granted the long-awaited 31 billion tranche of bailout funds that have been held over since June. But there's a lot of questions that have been answered in terms of who's going to fund this extra 2 years. The IMF chief Lagarde sounds rather upset about it all. So some questions still to be answered, but markets gradually took on board that yet again the Greek can had been kicked down the road. And also in Washington, there have been some noises that sound almost like common ground in relation to income tax deductions. So edging perhaps just a little bit closer together in terms of maybe some sort of fiscal cliff deal being done in time before the US goes over it, which I might add is our view. I mean, we think that there will be a last minute deal, there always is. Okay, so given all that, markets were down at the open, they're not now. In Europe at the close, the London market is basically unchanged, but then the French market's up 0.5%, the Germans up, sorry, start that again. The German market unchanged, the London market up 1/3%, the French market up 0.5%, and there's gains of around 1.5% each in Italy and Spain. The Dow is up 0.4% at the moment. It's about 530 in London. In commodity markets, a bit of a mix there with oil prices down 0.5% at $85.14 a barrel. Gold's little changed at $1,729 an ounce, and copper's up about 0.5%. The Aussie dollar, it's been very choppy today. It's about 1.043 at the moment. Tomorrow, or today, which is Wednesday Sydney time, Westpac puts out the November consumer sentiment read with the Melbourne Institute, and also we get quarterly wages figures. They were running a little bit hot in the second quarter. We're looking for a slightly slower 0.8% pace in the third quarter compared to 1% growth in the second. All right, that's it for today. I'll be back tomorrow, but that will be the last report for the week, because I'll be out of the office on Thursday and Friday. Okay, speak to you tomorrow.